Hello and welcome to the program on changes to the FLSA and employees' payroll budgets. On behalf of Aurora Training Advantage, I would like to thank you for joining us. Your guest speaker today is Teri Morning. Teri is the president of her own HR consulting firm and principal partner in a new company, Hindsight HR, employer relations and investigation management software. She has over 15 years in human resource and training experience in a variety of professional fields, including finance, retail, engineering, consulting, public sector, and both profit and nonprofit company structures. She has consulted with employers on their problems and trained managers and employees for over 10 years, enjoying meeting and working with employees from all types of businesses across the country. In addition to an MBA, Teri has a master's degree in human resource development with a specialization in conflict management. Questions can be entered in a control panel, and as many as possible will be answered at the end of the presentation. Enjoy the program.
Thank you, Isaac. Thank you to everyone for allowing me to present today and dialing in. You can see the agenda on the screen in front of you, so you've likely seen that before, so I will not bother to read those bullet points to you, and we'll just go ahead and get started. If you have, like Isaac said, if you have a chat, please send it to me as we go along. I divided this presentation into 3 parts. I don't know what you do for a living. You might be a brand new small business owner. You might be a seasoned HR, payroll, tax specialist, CPA. I don't know. But what I do know is that you have to have an understanding what the Fair Labor Standards Act is, because while they are big changes and expensive changes, it's relatively a simple change. The hard part's figuring out how to pay for it. So I divided this presentation into basic, what is the FLSA, Fair Labor Standards Act, and then the changes to it, and then I did a kind of a Wild Toads ride, Mr. Toads, you know, the Disneyland ride, Wild Toads ride through the, Mr. Toad, that's what it's called, Mr. Toad's Wild Ride through what I call Compensation 101, and then to talk about the business side of things. So maybe technically 3.54 parts. So let's go ahead and get started with what is the Fair Labor Standards Act. The Fair Labor Standards Act has really 3 parts to it, 3 main parts. Minimum wage, federal minimum wage. Your state may very likely have a higher minimum wage. In fact, if you're in certain parts of the country, you might, and maybe your city has a higher minimum wage. But it establishes federal minimum wage, overtime pay, which is where the exempt versus non-exempt issue raises its head, and that's what we're going to talk about. You're either exempt from the overtime regulations of the Fair Labor Standards Act, or you're not exempt, hence the terminology. Record keeping, obviously you have to keep good records for, in fact, you know, your wage, payroll, and its related records are, you know, really the bulk of your HRIS record keeping, or, you know, there might be, you know, 2 or 3 records out, but something almost always, if you've ever done payroll, if you realize kind of, you know, payroll's kind of like the, you know, ocean, and all rivers or records run into it. It's one of the biggest record-keeping requirements of your business because, you know, you've got taxes and what have you that fall into there. Federal child labor standards, and then your state will almost always have some state child labor standards, like, you know, work permit requirements, posting requirements, what have you. Now, the break, you know, break laws, those are set by the state. How break laws are paid are determined by, we'll call it the FL, just so you don't have to hear me say 4 words over and over. So we'll, because the acronym most people use always sounds weird to me to say it. So how your breaks are paid is determined by FL, but whether or not you have to have breaks, how many, when, like if you compare California to my state, Indiana doesn't have any break laws as compared to California, which has very particular, is an understatement, break laws. Okay, now this covers full and part-time workers. Okay, so just because you went part-time doesn't mean you're not covered by it. In the private sector and in federal, state, and local governments, if you're public sector, what we like to call collectively federal, state, and local governments, there are some differences for you. The Wage and Hour Division of the Department of Labor administers and enforces this law with respect to private employment, public sector, federal employees. You can read that long labor list. And as I said before, there are special rules that apply to state and local government involving not just employees, but certainly fire protection and law enforcement activities, volunteer services, and compensatory time off instead of cash overtime pay. Public sector is the only one who can give compensatory time off instead of cash overtime pay. And when they mean cash, they don't mean that you have a barrel of cash in your office. They mean, payroll. But there are particular, mainly because of their schedules and what have you, with like fire protection and law enforcement, there are particular things that apply to them specifically in the public sector. Okay, so we're just going to talk about the overtime part of this. So you're either exempt from the overtime requirements of the Fair Labor Standards Act, or you're not exempt. And if you're not exempt, then you have to be paid overtime pay at a rate not less than 1 1/2 times the regular rate of pay after 40 hours of work in a work week. Now, once again, if you're in California or, even Oregon's got some Oregon's got some funny state overtime laws. California has like daily overtime, but this is, the federal. And an employer can always do more than the law requires. You could pay double overtime if you wanted, and you might even decide to do that on a holiday, or you might be covered by a union. I know, so I can almost hear somebody out there snickering that has a union contract where they might have to pay triple time if somebody works on, on a holiday, but that's a contractual obligation. And so I worked at an engineering firm one time where we paid our exempt engineers, we would pay them straight time, so not 1 1/2, but straight time for any hours worked over 40, and as long as it was on a billable project, because, if you could bill somebody $250 an hour for building a bridge, then it would certainly behoove you to pay them the $65, and it was charged to the client anyway, so it was a nice little employee perk that set us apart for recruiting purposes. So don't forget individual state, even local laws. All right, so this is important. This is why I put this is important at the top of the slide. This is the idea of being exempt. This is a really old law. It was not updated as often as it should have been. If you look back to when the law was passed, and you look, actually I think it was passed in 1938, but then there has to be a regulatory agency developed to administer, interpret, and enforce the law. But they were like ridiculously low salaries. Even $4.55 was like, I think it's like I've got it somewhere in here later, 1.6, $4.55. The current rate is 1.6 the poverty rate. So it was a really old law, and in some respects it doesn't really match up to today's employers. And there was even some of the thought that you'll read sometimes that one of the purposes of the law was coming out of the Depression was to encourage employers to put more people back to work, because if you had to pay a premium, that 1 1/2 times overtime rate, for any hours worked over 40, if you needed more people, you might just hire more people, put more people back to work. So the exemption is a 3-part test. The employee must be paid a predetermined and fixed salary. It's not subject to reduction because of variations in either the quality or quantity of the work performed. If you have an exempt person that is not getting their work done, you've got a performance issue going on there. You cannot reduce their salary because of variations in the quality or quantity of the work performed. It's predetermined, it's fixed. It's currently $455. December 1st, it's going up to $913. Yeah, they overhauled it, right? It could have been worse, though. Number 2, the amount of the salary paid must meet a minimum specified amount. Okay, that's what changed. That's the whole gist of it. And is important here. See, it's a 3-part test. So if you got 2, you're not exempt. If you got 1 of these, you're not exempt. You have to have all 3 of them. And the 3rd part is the employee's job duties must primarily involve executive, administrative, or professional duties as defined by the regulations. Yes, there are more exemptions. The computer professional, the outside salesperson are the 2 other main ones. There are some smaller ones. But the thing about number 3 here is the job duties have to meet as the tests as defined by the regulations, not as interpreted by somebody who wants to make people exempt. So there's been a lot of poetic license taken with interpreting the regulations instead of, as defined by the regulations. And it's probably the one law that every employer is violating in some way, even if they're trying not to. I've got in here, and I'll point it out to you when we get to it, the updated field manual, which is actually a really good source of for you, not only to the the changes in the reg, but it will list out what are the regulations definitions of executive, administrative, professional, outside sales, computer professional. And it will not only define what those duties are, it will define words, how they're used, such as what does it mean to customarily and regularly. So it will define customarily, it will define regularly for you. So it's easy to, it's not that hard to read. Outside sales are rough. They're not subject to the salary basis and salary level requirements so long as they pass the job duties test for outside salespeople. They're going to qualify for exemption regardless of how much they earn. So the outside sales test, the outside sales, that's brutal unless you're really good at sales, and then you can make a ton of money. Thus, outside sales employees are not affected by the final rule. Final rule being the changes to number 2, the 913, because they're not subject to the salary basis and salary level. Salary basis is number 1, salary level is number 2, the job duties test is number 3. And so they're not subject to number 1 and number 2, they are subject to number 3. I know you're saying, well, you just said that didn't count. Hopefully I qualified that with the outside sales exemption. If you want to determine if your people are truly outside sales employees, there's your fact sheet. There are a lot of people who are considered outside salespeople who are really, according to the regulations, inside salespeople. I've got that link for you for inside salespeople somewhere later on in here. All right. Now we also have this interesting thing called the highly compensated employee. As of today, until December 1st, they're exempt from the overtime pay requirements if they are paid total annual compensation of at least $100,000, which must include at least $455 per week paid on a salary or a fee basis. So I know you laugh, $455. Well, see, what happens is they can make that up at the end of the year, like with what I like to call a big honkin' bonus.